I don't do anything. Well, sometimes I do, but most of the time, I won't take a trade until after 9:45, unless it's just something I really like. I'll go small. But most of my trades come between 10 o'clock in the morning and 11 o'clock, that 1 hour. If I can't find a setup in that time, you guys know my other rule. If we get into a position, say at like 10:45, and we get to 11:50 and the move still hasn't played out, I never hold through lunch, right? Never hold through lunch because it's characterized by low volume, false breakouts up and down, and most of the time it's chopped, right? So if I get into a position because of a time-based liquidity and we go all the way into the lunch hours and we still ain't hit it, I'll just close it out no matter what. Up, down, break even, it don't matter, right? All right, so once we open, that's when I'll go back down to this 5-minute chart. And I'm just waiting, right? I'm just waiting. Once the 9:45 closes, right, and you have your open range and high, that's when I'll be looking for some type of breakdown, break up. But I won't buy the breakout, right? I always want to wait for that pullback. You see, we opened, we went straight down to the pre-market low, and we bounced. Straight back up to the open range high, sold off again. And then once we broke below this, that's when we really sold off. So this is just an example of how I get my levels. That way you know what you're looking at. It's not always going to be like this, where we had already taken that low out. Most of the time, you'll have it to where you have a big high, a big low, and you'll open up and you can time that move, right, by waiting on the liquidity to hit. Say, for example, it never went up and took out this pre-market high. We'll zoom out. So if the chart's looking like this going into, and we have a big sweep down, you're looking for a sweep of this level, and then a bullish candle back above to go long. Same thing with the upside move. We opened up here, we went all the way up there. If we had taken out this high, right, and then falling back below, that could be a great short with a low risk, right? Because you're buying basically where you're wrong at. You see that happened over here. We swept the pre-market high, right? And then we instantly went back down below. This is a bearish candle, right? Oh, this long wick is a bunch of emotion. But ultimately, the sellers took control and drove it back down. So you notice we never, ever got a close above the pre-market high. We never even got a close above the open range high. It was all wicks. So if this would have happened Friday in the morning at like 10 o'clock, I would have definitely taken this the downside. As soon as we got this break, liquidity sweep, closed below, I would have immediately took a short with my stop loss just above, right? That's just one simple thing that I do, guys. Finding my levels, getting ready for the day, and we have it on, right? I do this every day. This is my pre-morning routine. This is my routine first thing in the morning, pre-market routine. And you got to have a process. If you ever really want to be consistent, you got to have a process, and then you have to trust the process, right? It's not always going to work out. You could have the best stuff in the world, using all your rules, and the trade still doesn't work out. And that happened to us yesterday, actually. So let me remove all this. I'm going to go now to QQQ. Let me get an open screen. All right. Now we're going to go over the BBS strategy. I'm going to show you how to use the BBS, what it's there for, how to set it up. Right? So first things first, BBS stands for blue box. Blue box strategy. It's nothing special. It's very easy to use. It's something I've been working on for about a year. And the swings off it have just been incredible lately. The day trades this week were a little bit of a hit or miss. I'm going to go over, first of all, what it is. So the BBS uses a Fibonacci retracement, right? If you're not familiar with Fibonacci, if you're on TradingView, it's going to sound check real quick, guys. Can everybody hear me good? Oh, baby Yoda. All right, good deal. All right, we're gonna get into the BBS. This is my favorite strategy. I probably said a lot in chat BBS, and you're wondering what the hell is a BBS. I'm about to show you. So this is the Fibonacci retracement on TradingView. Now I'm gonna break it down as if everybody here has no idea what I'm talking about. For the Fibonacci, you're just gonna go over here to the toolbox, right? It's this first one, fib retracement. You can put a star beside it, right? Way it's in your little drawing toolbar, right? So once you get the Fibonacci up, you're gonna draw down just to get it on the screen, right? Matter of fact, let me do this. We're gonna turn it to default setting. After I show you guys, I'm gonna show you how to set it up. So I have the 50 let's start with the 38, the 50, the 61.8, right? This is the blue box. And I have targets. Now, notice this is very probably unusual to a lot of people who do use the Fibonacci. These are negatives, right? So when you're typing it in, you have to actually put negative. Now, you can't do this on mobile. You're going to have to do it. Well, at least I couldn't. I couldn't pick the little minus symbol on the mobile. So first you got to go to your desktop, set it up that way, and then save it. You can save it down here. So let me just show you this. Let me turn to default. So when you first pull it up, this is what yours is gonna look like. This is what it's gonna look like, right? Well, I changed mine altogether. I mean, I think this just looks so. I don't like it. Never did like it. So we're gonna click on it. You're gonna edit it, right? I normally pick mine with all colors first. I'll just do the blue, and then I can go back. So I take this off. I take this off. I keep the 38, 50, 61. I take this off. All this stuff, right? Then when I go back in, I'm gonna show you the numbers again. You're just gonna put a negative, right? Negative. I make that green, lime green. That's the target, right? So we're gonna go back to it and apply the old one. Now that I showed you how to adjust it, what it looks like when you first pull it up, and how to apply it. Crazy BBS. All right. So you can screenshot this, or I can screenshot it for you guys later. This is what it is. I don't always leave the 38 on, mainly the 50 or 61. Right? Negative 272, negative 618, negative 414. Right? Those are the ones that we use for the BBS. And then just click out of it. And then now you know. If you don't know how Fibonacci works, the idea is if you're in an uptrend, like uptrend, you're in an uptrend, right? You come back and it holds at 50%. This is the move. It's an ABC setup, right? So Fibonacci, it doesn't matter whether you're trading to the upside or downside, right? If you have a move up, or it can be a move like this. The move down, come up, and then go down. It's either way. It's not just bullish, not just bearish. That's the very basics of the Fibonacci tool, right? So now let me show you this setup. Went over the BBS, you know what it means now. And I'm going to show you the setup that happened on Friday. All right, so first of all, let's do this. We're going to map out your market high, and the pre-market low. And now that we have that on the board, what's the next thing we're going to do, right? Go to the 15-minute chart after the first 15 minutes, and we're going to map out the open range high. And you guys can have it any color you want. This is what I've chosen. First 15-minute candle. Open range low. All right, so now we have everything we need, right? And if you're looking at the overnight levels, you'll see that on future, right? Or you can just ask me in the mornings, what's the overnight levels for SPY QQQ, and I can hand them out to you. But you need to learn how to look for it and find it yourself as well. So now that we have everything set up, we'll go back down to the 5-minute chart. I'll show you guys what went wrong in that trade from yesterday. So we opened up the day, right? We came down all the way down to this pre-market low. We never dropped below it, right? Never dropped below it. We put in a bullish candle, we held. Then we had this bullish imbalance to the upside, right? Came up, rejected the open range high. So this tells me this move, at least I thought at the time, that since we came all the way down, made a double bottom, and we bounced away, that this move was much stronger than this move. It has no imbalances. It's just straight down, controlled selling. So over here, you have this big bullish engulfing that left this big gap. So if I turn on my tool, you're not going to see it now because they got it. But there would be a box here. We'll just do that. I'm going to turn this indicator. And you notice I have all my indicators off. I only use those for confluences. We're going to have this box. This is the, some people call them a fair value gap. I prefer calling them an imbalance. But that's what they are. It's just an imbalance in price. When it shot up so quick that it created all this is a bullish imbalance. So we come to test it and we bounce, right? So now that we have this box on, the trade that we took, once I seen us go up, what's going on? Everybody good? Oh, okay. Screenshot. Yeah. Appreciate that, man. All right, so we're gonna get back into it here. Once we came down, made that double bottom, we had that bullish imbalance to the upside. I thought that we were gonna come down, hit here, and then take off. Why? Because we had multiple confluences. So now I'm gonna throw the BBS on. Come right back to it. Swing low. No, there's no indicator. I do all this manually. Swing low to swing high. And you guys see, it was a perfect textbook setup. Had everything that I looked for, but it didn't work. That's just the way it goes sometimes. Nothing's 100%. That's why we use stop losses. All right? So now we know. Also turn you up. Now we know that we had this bullish imbalance, and when we came down into it, the way I use BBS, I don't just, all right, we're coming down to the 50%. As soon as it hits, I'm getting in. I think that's more riskier. That's more aggressive. And it may not always have a high probability when you do that. Excuse me. What I want to look for is a bullish candle of some sort. It doesn't matter what, whether it's a bullish hammer, bullish engulfing, doji bullish breakout. We just want to see that confirmation. You don't want to just get in because it hits the buy level. You want to see confirmation off that buy level that has confluences behind it. So in this case, we came down into the, right? Let me actually, I'm going to take this off now, guys, so you see that this is the imbalance. But we came down into the imbalance, which was perfect. All right? And then you see we hit the 50, 61.8. What happened? This was the open range low as well, right? So it's an important level. He had already reclaimed that. Now we're coming back to retest it. And then this candle right here, bullish candle, pretty much a bullish engulfing, right? Where did it hold? It held the open range low, that's one confluence. It hold the bullish imbalance, that's two confluences, right? And it's hitting the BBS. Okay, I got you, I got you. How about now? Okay, good, good. All right, so where were we? Talking about the confluences. When you're going to use the BBS or any type of strategy, you want to wait for that bullish confirmation off your level, whether it's the time-based liquidity level, whether it's the BBS or these opening levels for the open range high, open range low. You want to see how it reacts before you get in. We had a perfect reaction. We had the bullish imbalance, we had the BBS, we had the open range low. So this was a lot of support right here. Then we got confirmation. We got a bullish candle that closed above the previous high of this candle. That's everything. As soon as it went out, I told you guys, all right, I'm in. This is the move that I was looking for. This is what we were looking for, this ABC. So you had A, B, I was looking for a move just up to the first, right? That's what we were looking for. We got in and it was chopping around, right? Got in and it was chopping around. As soon as we got in, I think you guys remember, anybody that took this trade knows that as soon as we got in, it went up and did this. Got the confirmation here. This is the BBS trigger, right? Off multiple confluences. Got in somewhere like right in here. As soon as we got in, it went boop and dumped on us, right? But the BBS was still fine. Came down in, another, that was even better, like fully engulfing this candle. As soon as we went down there, that's when I sit down and chat that I doubled down on the trade, right? As soon as we came down and we held, I doubled down, and then we hit this big spike, right? As soon as we had this spike, I sold the average down, right? Because I didn't want to be too heavily leveraged into one play, right? And I'll do this all the time. Like if we get in and we come back to retest the lows of the confirmation bar, I'll average down, right? But then as soon as I get break even, I sell that average down because I don't want to be over leveraged. That's a strategy I use too, just kind of to mitigate risk. You can average down, you can make money on that little pop, and then just be holding your original position, right? And then eventually what happened was we just couldn't get it going, right? You had all the confluences, you had the bullish BBS trigger, we had it twice. So you had double confirmation. I was looking for this thing to break and go straight up. I was very surprised that it didn't work, but that happened. As soon as we broke below the BBS, we cut it right here. As soon as they broke below, we're out. And then a massive flush came. So that was one that we got wrong. Because I want you guys to know from the start, this isn't going to work every time. And you want to over leverage no matter how good the setup is. Any trade can lose. Doesn't matter how good it looks. So that's just one example. All right, so I'm going to take everything off. I'm going to go over to Thursday, show the BBS from this day. All right, so first things first, I'm going to go to the 15-minute. Make sure I got the right one on the screen. We're going to map out the open range high. This is very important step. You have to do this. Now, keep in mind, anything I'm showing or telling you today, this is just how I trade. Every trader has his or her own unique system and something they follow. If you want to try out these strategies, you have to take these step by step, exactly what I'm doing, right? And then once you get down the concrete foundation, then you can tweak it. If you find something that works better, or you want to try this out, you can tweak it and make it your own, right? Everything I'm showing you today, I learned from somebody else. But throughout the years, I've tweaked it into my own system, right? Made it my own. So the open range high, open range low. Okay. We're also going to put on there This was the overnight session still. This was the low. I'm going to mark it out. I'm just going to put it as the Asia low. And then this was the London high. Remember, you're not always going to see this just by looking at QQQ unless you're using Webull. Ultimately, what you need to do is use NQ or ES, depending on which one you're trading, hit the overnight levels and plug them in. This is the London high. All right, that's everything we need. 4 simple levels. Market opens. Wait for the first 15 minutes to close. You go back down to the 5 minute, right? And get to where we are. All right. So first things first. As we get this break, right? The 15-minute opening range closes. We break below. A lot of people will take this trade right here because we broke below. Not me. I never play the breakout. I used to, and I got burnt a lot. I never play the trend line breakout on any direction. I don't play the initial break below open range high or low. I don't do that. What I do is always wait for a pullback to the BBS. But as soon as we get this break, right, come down, we come up, and then we flush below the opening range low. I'm going to draw the BBS. It's going to be from the opening print down to the low, right? Instead of trying to catch this breakout move down, it really gives you a terrible risk to reward. Because if you get in on this confirmation, you're going to get in somewhere around right here. Stop loss is going to be way up here. Not good, right? Not good. So instead, I'll wait for the pullback, right? We're coming down. I see that we get a candle up, so I'm like, this could be the low. So swing high to swing low. Now we're waiting for it to come back, hit the BBS, show us some confluence with a bearish candle, right? To take short. So what happens? We come straight into the BBS. We also back testing the open range low. So that's 2 confluences right there, right? And then I'll turn on VWAP just to see. We got VWAP there too, right? Then I'll turn on the clouds. We got the clouds there too. This is how I start doing my confluences. The more confluences, the better. But I don't leave those on because it's just noise. It's too much noise on your chart. I keep everything naked, and then when I'm ready to send out an alert or a trade, day trade scalp, doesn't matter. Then I start checking all my confluences to see if everything lines up. The more it lines up, the higher the probability of the trade working out is. So I just showed you we had VWAP, 1, open range low, 2, BBS, 3, the Ripster clouds. We have multiple confluences on this setup. So you're not going to get in just because this candle hits it. You're going to wait for a bearish reaction. Right? This is when I'll turn the volume on. You want to check the candle that reacts, what kind of volume does it have? So we came all the way down, volume. We started going up, lower volume. When we got this rejection, the volume started accelerating again. So look at the volume of this candle, higher than all 3 of these greens. This rejection from a level, a small range with multiple confluences, volume. So this is your BBS trigger. As soon as this candle closes, that's your BBS trigger, right? What are you going to do? You're going to enter there, and I'm going to show you using this short position. If your entry is going to be here, as soon as this candle closes, we'll call it right there. That's your entry, right? The stop loss is going to be of the BBS, right? Let me turn this off. Stop loss is going to be above the BBS. The target, most of you realize what the targets are. The target areas are down here. This is the negative. So this is going to be your first target. And I say this all the time too, guys. This, let me edit this. I don't like how this stuff's on. Right? Target 1, right there. Your stop loss right above where you entered, right? So you're not going to put the stop loss like I was saying earlier about this candle over here. The stop loss way up here, you don't need to. If it goes that high back up, it's probably not going to work out. The reason you got in is because it couldn't get above this level, right? Always leave a little bit of room, get wicked. Look at the risk to reward in this thing, guys. 4.5, right? 4.5 risk. It wasn't a huge move. It really wasn't. But the risk to reward is incredible, right? You have your stop, you have your target. Let me take this off so you can see it better now. What did we do? We rejected the BBS, we hit TP1, we bounced away. I say this in chat all the time. This first level, especially if you're playing a move like this, where this was a simple A, B, C. Playing a simple ABC where we've already seen the first leg down, the pullback, and you're playing the second leg, the C leg, most of the time, it's going to stop right here at this, and it's going to bounce away. So if I get in, let's say I get in a day trade with 5 contracts. We hit down here, I'm taking off 4 contracts, and I'll leave one. I always leave one. Stop loss at break even. This come all the way down. But I will say, and this is very important, I've noticed, especially as of late, this first target, you can actually sell your puts and flip the calls, right? Take this off, this first target. Why can't you flip the calls here? So, as soon as we get down to that first target, look, we get a bullish reaction on strong volume, right? Bullish reaction on strong volume. This looks like a correlation candle because of the high volume, right? Candle sweeps below this low and closes back above with high volume, right? So as soon as you see this candle close, you can actually flip. You can actually flip long, right? And this is what it would look like. You're long, let's say you got in about right there. This candle closed. It's going to be just below, and you're going to target a move back to that same open range low. Still a 2.61 R, right? Still a great risk to reward ratio. So let's see what happens. This was also at 12 o'clock. So I take that back. I wouldn't have taken this trade. This is just a good example. But if at 12 o'clock, I won't take it. The only time I take a trade is from 9:45 to 11. Most of my top trades come between 10 and 11 o'clock. That's it. You get 1 hour. If it happened, say at like 10:30, I would have definitely taken it and I would have targeted back. You see that? What happened? Following day, did he end up getting stopped out? Not by much, it was a wick, and then we went ahead and fell. That's just another example of using that first target level. You still would have, if you would have got in here, you would have stopped out for break even. You wouldn't have lost any money. And you may have just took profits right there because you just caught that big leg down. So this is probably like a bonus move. I just want you guys to be aware of that. That first TP on the BBS, it normally creates some type of support. I would say like 80% of the time. Doesn't mean we won't go back later and break it, but the first attempt, really hold those, right? All right. I'm gonna take 2 minutes, guys. I'll be right back. I normally don't do Q&A on these streams just because I'm trying to cover a lot of material, but I'm not in no rush. If you guys aren't in no rush, it's a Saturday. I'll pause, let's say for 5-10 minutes and take some questions. If you guys have questions, just type them in the chat and I'll try to get to as many of them as I can in 5 or 10 minutes. So we already went over the intro. We went over the time-based liquidity, finding the overnight levels, the opening range, high and low. I showed you how to set up the BBS. Remember, you're not playing every setup that price action hits the BBS. You're waiting for that confirmation candle. You're looking for multiple confluences, whether it's VWAP, 21 EMA, a time-based liquidity level like the open range high or low or the overnight high low, right? You wait for the reaction. And the number one supportive of a play is going to be the volume, right? I keep my volume off. I don't want to know unless I'm looking to get into a trade. I like my chart to be completely naked. All I want to see is the price action. But once I'm about to get into a trade, I'll flicker the volume on just to see, hey, do we have an increase in volume on this wick that hit a specific level or took out some type of liquidity? Do we have a bullish candle or bearish candle? Doesn't matter. If we do, was it on high volume? If it is, and we have confluences, I'm going to take the trade every single time. Same size every time. For example, if I say this is a textbook, no-brainer play, that doesn't mean I'm going to size heavy. I'm going to keep the size the same all the time, right? Because we're playing a game of probability. Doesn't matter how good the setup is, how textbook it looks, it can still fail. We just seen that with the Friday example. That was a textbook setup. It had everything we needed, but it didn't work. There's nothing wrong with that, and you can't try a strategy and then because it doesn't work out a few times, you just throw it away. You're never going to be consistent or successful doing that. You have to pick a strategy. In trading in general, you have to pick a strategy and you have to stick with it. You have to pick a strategy that resonates with you, something that makes sense and is simple. If it's very complicated, probably not for you. It needs to be as simplified as it can be, right? That way you have a good, solid edge in the market by following your system, following your routine that you know. And that's how I have my conviction levels. Like, I know a lot of people were bummed out about Tesla, right? When it first started going down. I mean, we were down big. I didn't panic because I had my conviction, right? I had my conviction. I knew the setup that I was playing. And in the end, it all played out, right? But conviction comes with time in the markets. You got to have a lot of screen time and experience. And once you see like the BBS, my favorite one, I always play it. I've seen so many trades work out beautifully by using the BBS that when a few don't work out, it's fine. It's fine. If I can have a 65% win rate doing it, it's incredible because you'll notice with the BBS, you're buying essentially where you're wrong. You're never going to lose, or you shouldn't lose a lot of money playing a BBS setup, right? Because you're buying where you're wrong off a bullish candle. If we break a few below that, you're out. So just remember all that. So I was just talking for a second, Chris. A lot. Yeah, guys, I was just talking. I wasn't showing you nothing on the screen. I was just explaining stuff. All right, how do you? Yeah, we're about to go over that. I was just pausing for a break for Q&A. If anybody has questions about anything we've gone over, just ask. Actually, I'm actually going to go over him specifically. So if nobody has any questions, we'll move on to that portion. I'm going to show you how to use the BBS for swing setup. Everything I've taught you so far, I've gone over, is just for intraday scalping, day trades, maybe a one-day swing. Yeah, could you explain the BBS? Yeah, I just went over it. BBS is blue box strategy. It's just using a form of the Fibonacci retracement, and you're waiting for confirmation with confluence of other levels, right? So we're about to go over another example. Let me just go over this. It should make a lot of sense. We'll go to him. It's probably one of my favorite setups in the market right now. how to identify if chart breaks support or resistance level. I mean, so let's just say, for example, the open range and high and low. If we break below it and close the 5-minute candle below it, for me, that's officially a break of support. Same for the upside. If we get a 5-minute close above, that is what gets my attention. All right, we've broken out of this level, this key time liquidity level, right? Time-based liquidity. But I don't play the initial breakout, right? I wait for the pullback. That way I can get the best risk to reward ratio I can possibly get, right? Because if you buy that breakout, you're going to have a lot more risk on the table. If you wait for the pullback to the BBS, you're going to have minimal risk. So let's go over that with him. Now I'm going to show you all this and explain it, and then I'm going to redo it all so you understand how to get it. So, him. I know it had this massive breakout, right? And it pulled back what I call a rally-based rally. This was a break of structure right here, right? This was a level. We pulled it all the way out. We broke below, came close, rejected. You had this candle right here, and you broke above. This break of structure is about BOS. BOS stands for break of structure. Where I'm going to put. This is where I'm going to put the swing low to swing high, right? So you see where I got it mapped out? Right here. Because this is the breakout candle, guys. I do look at the long-term view. Like you can pick the long-term. You pick the, so the very bottom, I want to call it here. This was the original swing low. All the way up here. You can do that, but that's more for a longer term view, right? We obviously didn't pull all the way back down here. So I'll look at that one. The first thing I do is put on the long term. But when I see that we're starting to consolidate, I'll take off the long term and look for the most recent swing low to swing high. That's this candle here, right? Because you got this big volume breakout. You have the break of structure. This candle right here, this is a break of structure to the upside on massive volume, right? So this is the breakout candle. So this was the low of this candle, right? And then you have all the way to the high, right? See, we entered HIMS a couple of days ago. So you had this big volume breakout here, never buy during it. You wait for, I've been waiting on this pullback. To pull back straight into the BBS. I want you to look at the confluences we have, right? We have a gap here, we have a large gap. We filled the gap, bounced away, right? The BBS, right? We held the BBS. So now I'm going to turn on everything else. EMA clouds. We're bouncing right off the 21 EMA. Now, that's 1, 2, 3, 4, 5 attempts to break below the gap. Every time they got bought up. And then look at the volume that came in on this breakout. That's the volume. What do you notice? Let's go down so you can see it clearly. Look, big volume, all the way through, but it slowly starts to die down when you start to pull back. That's when the volume really starts to die off, right? This low volume. The buy off the gap, bigger volume, right? These three candles were all declining candles. Low volume, lower. And then you had the breakout. It wasn't just a breakout on the chart, it was a breakout in volume too, right? We have multiple confluences. We have the BBS, the gap fill, and we have the 21 EMA, and all this was done on bigger volume than the pullback. So that's what we have now. So that's why I entered. And I think this is about to make a massive move, at least up to 75 plus. This is what I'm looking for. We had this breakout. I'm looking for this to be gadget breakout A, B, C. Minimum, I'm looking for 73. But I think we can go as high and fill both of them, right? I really think we can. Now, this ain't gonna happen in a day or two. That's why I bought January 2026 70 call. I'm looking to hold this all the way to the target, right? And then where's our stop loss? Even if we're wrong, we're not gonna lose much, right? Because if it breaks below 51.20, I'm gonna use 50 because that's a big round number. We're in, I forgot what our exact entry is. Let me see. Let me look on the app. To get that exact entry for you guys. So on HIMS 70 call for January, we got in at 53.46. That was the price of the underlying asset when we got in, 53.46. So you see what the BBS is? We waited for that confirmation, right? I think when I entered somewhere on this candle right here, right? Because we got the bullish trigger, I'm in. Our stop loss is going to be below 50. So if we're in at 53.50, let's just call it 53.50. We're risking $3.50 for a move to 75 plus, right? Risking $3.50 for a $20 move. Huge risk to reward there. Even if we're wrong, we're not going to lose a lot. This is why I love the BBS. Right, so I'm going to take everything off. Walk you through it. So we have the big breakout, right? The first thing I'm going to do when I'm looking at it, just in case, because we don't know how far it's going to pull back or if the pullback's going to be shallow, the first thing I'll do is I'll check the long-term BBS on it, right? If it were to come out of there, you guys understand the BBS now. You're going to take that down there once you get the bullish confirmation. You put on the other confluences, right? See that we're holding the 21 EMA, we're holding this fair value imbalance, we're holding the gap fill. So I was like, well, let me take that off so we don't miss the move, and I'm going to go from the breakout. So how do we determine the breakout? Well, you have this candle here, right? Oh, don't do it like that. You have this candle here. This is your breaker structure. If anybody don't know what BOS stands for, it stands for break of market structure. We had this candle that rejected, and then we had huge volume on the break. So this is the breaker structure. This is important because this is where you're going to put your swing low at. Now we go to the BBS. I know that this is my swing low breakout candle. Put it there to the swing. Now I noticed, I put that up. I'm like, okay, so from the low of the breakout, we traced the BBS. We're holding the 21 EMA. We're holding the gap fill, and we have a breaker structure down here on high volume. We had lower volume this entire pullback, and then volume just popped again on Friday, right? Right now, we're currently up 15% in the app on these calls, and I'm holding all the way. So you had your breaker structure, you had the pulling method. This is also, you ever see me in chat talking about the pulling method? It's when you have a big breakout on volume, and we start pulling back on lowered volume, and then we have this bullish golfing. This is called a textbook pulling in method off the BBS, right? Very high conviction setup here. I only have one contract. It's very important. You got, just because I say this is the best setup I've ever seen, that doesn't mean I'm going to put any more money into it. I'm going to keep everything the same, right? I got one contract. I think it costs $1,200. And I'm perfectly fine with making $500 on this trade because I play the game of probability. I know any setup can fail. My job is to at least hit 65% year over year. If I do that with good risk management and really spreading out my funds, I'm going to make money. All right. That's him setup. Any questions on it? You guys understand why I like him so much? All right, I'm gonna take all this off. We're gonna another one. I want to look at Walmart. Another trade that we're in that I really like. I'm gonna explain how I got it set up. Let me take all this other stuff off. Well, I don't like all this other stuff off. It's just a bunch of noise. This is Walmart. We got into this. Let me see. Yeah, one second. Walmart we got into at 96.50, currently up 25%. So let's just redo all this, right?
Held off on shaving yesterday.
Walk you through everything. Let's see. So anytime there's a break of structure, you will consider it low. Yeah, if we have a break of structure and we have a move higher, that pullback, you're going to want to draw the BBS, right? Wait for that 5061.8 pullback with your stop loss just below, but you have to wait for that bullish confirmation candle, whether it's a bullish hammer, bullish engulfing, pin bar. You got to wait for that bullish candle to close, right? So it doesn't matter what time frame you're on. If you have a setup on the hourly, you got to wait an hour for that candle to close. If it's the weekly, you got to wait for the whole week to finish for that candle to close. The reason you have to wait for candle closes is because each candle represents a specific amount of time of data that's being generated from buyers and sellers. A lot of emotion goes into those candles, right? You see these big wicks? A lot of people got trapped going short there thinking it was going to break down, right? This long wick represents a ton of emotional selling. Now they're trapped and probably stopped out by now. All right, excuse me, that was my cat. But anyway, yes, break a structure, wait for the pullback with your stop loss below. Those are some of the best setups you're going to see. All right, so let's get into. So first thing we're going to do, first thing I will do, I'm going to look at the long-term BBS. Swing low, swing high.
So wait, where are you?
What do we notice? Well, notice if we turn on the 38, right? Look where it got. So that's another thing about the Fibonacci that just kind of comes with experience, but I can explain it to you quickly. If you have a big breakout and then you have a bullish candle off the 38, it just means the setup is that much stronger because the pullback was very shallow. I'm going to want it to come all the way down to at least 50. This was a good move down. Once we got this bullish candle, remember, shows that we are in at 96.50. 96.50. Got this bullish candle, and I looked at it was off to 38. This candle closed. I'm interested in taking a long for the move up to 105. Right? So that got us in the trade. Right? Next thing I want to do is, once we're in the trade, you want to continue to analyze the stock, right? I'm going to continue to analyze it. First thing I noticed was this resistance area, right? Probably going to put it about right there. So you want to have each wick touching, or not each wick, but you want to put it where the most touches. So one touch, three touch, all those touch. So that's an official trend line, right? We're also monitoring the higher lows. Look at this. All your touches in. All right. So I like to make mine nice and neat. So we have a series of higher lows, higher high, higher low. Once we break out of this, I think Walmart's about to make a big move, but there's something else I want to show you.
Yeah, she was there.
Right.
And she
I want to draw another BBS. Right. We're going to draw it from the bullish candle. This is the bullish BBS trigger candle as soon as it closes. BBS from the bottom break candle to the top. Swing high to swing low. And then I'm going to take it down to a 4-hour chart.
And some other things.
When we do that,
Like that. And she's like, oh, I don't know. Like, kind of, she was like,
look where it's holding up at. Remember, we just drew this from this low to this high, right? That was on the daily. It pulls back straight into the BBS, 61.8, almost perfectly, guys. Then you have that big bounce. So we got two bullish BBS triggers, right? One's off the long-term 38, the short-term one off the short-term 61.8. That's how I'm going to get my target. The target is going to be that 101.18. Second target is going to be 103.71, and then my final TP is going to be 105. This is the long-term first. This is the long-term first TP, if that makes sense. And remember what we went over earlier. To that level, normally we'll see a pullback, right? So just to keep things simpler, have your long-term that bounced off the 38. You have your short-term that bounced off the 61.8. You have multiple confluences if you turn on. Not seeing nothing there. Let's go to the daily. Be on the daily. Reclaim this. This is very. I think Walmart's going to make a big move next week because we got back above all this. But we're going to look at the volume. What does the volume tell us about all this? So let's go back to the long-term view. Off the 38 BBS, look at the volume. Huge volume. Volume we've seen since way over here, right? We come up, huge volume off this 38. Then look at the volume on the pullback, guys. Peak volume. The volume starts dying down on that first red candle all the way down here. Like less than half of that candle. Low volume, low volume. Then what happens? You get a spike back in volume until we get to the 61 BBS. And then this volume really starting to pick up again. And we're about to have a breakout. This is where I'm just going to take off the long-term BBS. I'm going to focus on this. Once we get that breakout, let's go to a 4-hour. There. Once we get this breakout, which I think is coming this week, these are the first two levels I'll really scale out at. And then I'll hold runners. I know when I sent out the alert, I said my long-term target was 110. Got it from, right? So I think I have two contracts on Walmart. I'm not sure. Well, once we get to these levels, I'll sell one, and then I'll hold one way up here with my stop loss above break even. This is the Walmart BBS. It's probably my second favorite setup right now in the markets just because of what we're doing. We're making higher lows off each BBS, and we're about to have a breakout, and we have big volume.
A judge told me that.
Everybody understand Walmart? Any questions?
Right, exactly. Imagine me going monthly. What the hell? Monthly's impossible. And financially it's impossible.
No, it's not too late. I would just go a little bit smaller. Or especially, this week, if you're not in, if we get like a little pullback, definitely. And because look, this is our setup on Walmart. Let me move all this junk. All right, so we're in right here. This is my entry right here off this line. Here are our targets. Where's my stop loss going to be? Directly below that 61.8, so right around. But I'll give it to 94, or the open of this candle. So this is our stop loss. So look at the risk to reward on that. It's not too late to enter, but I would just go a little bit smaller because because you're losing some of the risk to reward there, right? We're in right here already. Before this big move, my stop loss is going to be below this candle, a little bit below to give it some extra wiggle room, and our target's up here. So it's a 3R, right? That's great. Most of the time you want to have a 2-to-1, at least a 2-to-1 to be a 50% trader and still be profitable. Most examples I've given, or all three examples given today, was either a 3R to a 6R. Remember that QQQ setup? It was a 6R. I mean, you really don't find those that often unless you have a strategy that gives you the optimal entry, right? So this is the plan for Walmart. It's going to have a massive breakout, guys. I really do. Remember the number 3 rule. Never size into anything. Keep it relatively the same. Like I said, all of my plays, my lottos are like $500. My regular plays are anywhere from $1,000 to $1,500. Then my leap, I'll go as high to about $2,500 unless it's Tesla. On Tesla, I don't really have no rules, right? Because it's expensive and I like to buy time, so I know it's going to cost me. But everything else, you should be good. But this is the Walmart setup. I'm going to delete all that. So I want to do this. I don't want you guys to think that I'm cherry picking plays. These are just plays we're already in, so I wanted to show you. But I don't want you to think that I'm cherry picking charts of where the BBS is coincidentally working. So I'm going to ask you guys, is there any good setup that you like on good quality names? And I'm going to do my analysis live with the BBS. So any names you like, go ahead and put them in the chat. Of course, Nvidia. All right, let's do it.
You don't like Columbia spots though. You hate it so hard.
Nvidia. First of all, the first setup on Nvidia, I got in, but I sold way too soon. You see that we had, now let's turn our volume on. You see we had this big volume at the lows, right? You turn on the RSI, was also oversold. I very rarely use RSI. I only use it if we're obviously extremely overbought or extremely oversold, then I'll check it. Other than that, I don't use it. So in this instance, we were oversold. We had a huge volume, right? So let's close that out. So when Nvidia did this, if you would have known about the BBS and applied it, you would have caught a huge move, right? People, when all this was going on, folks were calling for Nvidia to go to 80, right? Or lower. They thought that it was about to do this. Well, I mean, some people probably had an idea, but most people were bearish when we were at the lows. The reason I turned bullish is because one, we had this breath run, right? This indicator, once it goes off, 6 months down the road, has a 100% success rate on the markets being green, right? So we had that. We were oversold. We had the big volume. This is a big volume candle, both of these. 1, 2, both the same volume, right? So we knew that this wasn't just retail buying. This was institutional participation, the big boys. You don't get that kind of volume from retail, right? Very rare. So we knew that this was a good, hard local bottom, right? Once that happened, the BBS, so as soon as we start to pull back some,
That's
the BBS, hold up.
I didn't even want to search myself because I really thought about searching.
Now look what we did. Came down a little bit below that 61.8, and we immediately reclaimed. As soon as you've seen this little doji candle, that's going to get my attention, right? Because we hit it, we closed above. So it has my attention. Once we get this breakout like this, okay, now I'm getting in the trade, right? Now I'm getting in the trade. I'll show you exactly how I would have done. I would have been in We at the close of this day, right? So let's just call it right here. I would have been in right there. My first target, and then my stop loss be below the close of this candle. Right? But again, that's the 3R. Excellent risk to reward. Everything lines up. You got the volume, you got the RSI oversold. We had a big pop. We pulled back to the 61.8. We held. As soon as we got that neck, this candle right here is the trigger because we held and we reversed. And look at the volume. So uptick again, right? So your stop loss is going to be below the close of this candle because you don't want to hold all the way down to the bottom of the wick. I know people will say it's good to stop loss at the low. I don't like to do that because there's no reason. Because if we break the close of this candle, we're probably going to go all the way back down, right? So this was your setup back then using the BBS. What it did overall. Picture, right? Once you got the confirmation, hit TP1 and hit TP2. Now it's coming back to back test TP2. So let's take this off. By the way, that's almost a 5R that on that move. So let's delete this. So here's the current setup. All right. Now we're going to go to the current setup. Remember, I'm going to take all this garbage off the chart. Don't want it. All right. We're going to leave the old BBS on. Why? Because we still have a target at 155. Coming back and we're holding that TP2. But now we want to look at a former breaker structure, swing low to swing high, to see if we're holding any levels at confluences, right? So what's the breakout level? You had this high here that we struggled at multiple times, right? Then we broke out of it and back tested. Right? So this is your break of market structure right here. So I'm going to draw the current BBS from this low, right, to this high. Take off the old BBS because we already know. Let me just do this. We know that 132.70. We're going to take this off. We know that 132.70. It's the same damn thing, guys. This is what I'm talking about. TP2 back test of the BBS was 132.70. The 38% of this little pullback is 132.69. It's a penny off, right? So that's your confluence right there. But the only thing is, this was also a structure, rejection, break a structure, and then instantly closed back below. This is a bearish development on Nvidia, right? But if you still like it and you're looking for a trade on it, at 130, I would just call it 132. If we break below 132, I wouldn't be interested in it, especially if we break below this low. So technically take a position on Nvidia right here because you're looking for that breaker structure that we're back testing. This is normally bullish, right? Because this puts a high that sweeps the liquidity and then we close lower. Now a lower low, right? That broke below this, filled the gap and kept going. So this setup alone has me cautious on Nvidia. I'm not in it. But if the markets are bullish, you could definitely see a move. And this would be the thing I would use. I'll put my stop loss right below. Let's call it 129. And your target would be right there. So you got to see if it's even worth it, guys, right? So your stop loss, that's not the entry. The entry is here. Your stop loss. So still a pretty good move. Yep. You have a tight stop for a reason, right? If it breaks below this candle, you may give it a little room below it, right? But not much. Call it 128.50. Right? And then your target is at 151. So technically, yes, you could get into Nvidia right now on a long position and still have a pretty decent setup and good risk to reward But this right here, I'm cautious about. Look at the volume and the confluences. First, we're going to turn on. All right, so obviously this is still a bull trend. This is the 9 EMAs, the 21 EMA ribbon. We're coming up, we're holding, up, we're holding. So this is another confluence at this level, right? That's confluence. Let's look at the SMAs. This is the 10, the 20, the 50, the 200. So the 200 is down here, so that's, we're also above the 200 moving average, which is another confluence. So as long as we're above that, the chart is technically bullish. Let's look at our fair value gaps. We got plenty. So these green boxes are bullish imbalances where we gapped up. We have plenty of strong, this was a very strong move, imbalances all the way up, right? And now you see you're coming down into one of those and holding. That's some confluence. We'll put the volume on. Let's see. Yeah, so that right there, I don't want to be in this trade. You got way heavier volume than this entire move up at the highs with a bearish fractal. This is a bearish fractal, right? 1, 2, 3, 4, 5. Technically, that's a bearish fractal on high volume. So that the volume alone would steer me away from the video right now. Not saying it's going to go down, but it's not a setup. It's not a high probability setup, in my opinion. Does all that make sense? I don't like the volume at all. Now, if we were to get back above this 137, I'm going to call it 137.50. If we were to get back above and close the day above, then I'd be more inclined to take the trade, but the risk to reward ain't going to really be there. If you take it at up here, let's see, we get a close back above, right? Let's say we get a close right here, and then you want to have your stop loss here. Yeah, it's only like a 1.8, but not great, not bad, decent at all. So it's still not a trade that I'll be, the trade that I would want to take on the video is since this breakout, I would want to see it come. I would want to see it come all the way down to the 61.8. Why? Because we have the 200 moving average right there. So this would be a great trade, especially, let's just say we came down, we chop around for a bit, and then we come down in to that 200 moving average, and we have a breaker structure to the upside on good volume, right? I would love to enter a trade off the BBS, and then let's measure it out. Let's say we came down into the 61.8, we had a bullish candle closed, and we got in about right there. Our stop loss would be 126, and our target would be 151. So look at that. Much better risk to reward by waiting for it to come down into the BBS with the 200 moving average confluence with a stop loss just below, right? So that's what I would be looking for on that. And then the move, what we'd be looking for is this to play out. A, B, C. Make sense? All right. That's the video. I'm gonna do maybe one or two more, and then we'll wrap it up. Let me see who posted first. Palantir. All right, let's look at Palantir. I'm actually still salty because I missed this setup, but this was as textbook as you can get on a setup, right? So let's look at what happened. So I'm going to remove all this and explain it. If I'm just going into Palantir and I'm looking at it for the first time, what am I going to do? I'm going to put on the long term just to see. Well, I got to take all this junk off first. Just to see where we're at, I'm going to put the long term BBS on. Swing low, swing high, right? Obviously, we're not getting close into this, right? So what you want to do is on that long-term BBS, or what I do, just get an idea of where we're at, and then you want to take that off and do your breaker structure swing low to swing high. This is the most recent swing low. This is the most recent swing high, right? Now that we have this on, just forget about this candle right now. Now that let's just say we were looking at it and it's right here. All right, so we came down to the 50, we held. You got your bullish trigger here. Anytime it comes down and the next candle is a green candle that closes above, doesn't matter what it looks like, that's a bullish trigger, right? Because we closed above, your stop loss is going to be right back. But before we enter, just based on that, we're going to look at all of our confluences. So, all right, this is confluence 1. You see all the way up. Down to the 21, held. Down to the 21, held. Down to the 21. We're interested in this. Let's see if we can stack some confluences on it to make it a high probability setup. So we held the 50%. Let's look at the volume. Look at the volume. Okay, so volume doesn't really tell us much. We went up. We didn't really get a big volume or nothing. Volume doesn't tell us much, but it also doesn't disqualify the play. All right, so take the volume off. Let's look at SMA 10, 20. So we're bouncing off the 20. 50, way down there, and then 200 we just looked at.
That's okay, yeah. I do that too sometimes.
Oh, this is Palantir, yeah. Sorry about that, guys. So the 20 moving average, which this red ribbon represents the 21 EMA. So that's the same thing, so it's irrelevant. All right, so we checked everything. We'll check we also have this bullish imbalance down here, also letting us know that there is nearby support. But the main 3 things were the BBS, 21 EMA, and the breaker structure. So
I left the cardboard box?
as soon as we get those came down, as soon as we get this closed, we're gonna enter, whether it's the next day or whatever. Let's just say we got in
stuff inside the box.
The next day closed, just for added.
No, but
our stop loss is gonna be
inside of a cardboard box.
Stop loss is gonna be below that candle, a little bit below. So we're gonna call it like 119.
I'll take it
right there, right? Our entry right around there, right around this area. Our target are 141, which is already a 3R, 150, 5R, right? Beautiful setup. I missed this one. Actually, Sage called this one out, man. I missed it. And then I looked back on it like, damn, it was a really good setup. I don't think it's too late, but I would wait for some type of inside bar consolidation candle for a pullback. So take that off. It's going to now complete what I think, like to me, 1, 2, 3, 4, 5, and we could be starting a new wave. Now remember, this 141 is going to be tough to break, in my opinion, because we're already kind of overextended. Right? Our size at 65. So by the time we get to 141, this may be around 69. So I wouldn't trade it for anything more. Maybe if you were to get in on a pullback, now let's measure the pullback. So we got there the most recent breaking structure BBS. Now let's look at the 4-hour and see what we can do with it. 1 hour. So we know this is where she held.
It's loud.
We're going to draw the BBS on that just to give us an idea. This is the low. This is the high. So what you're going to be trying to do is catch this move. So let's say Monday morning, down into this, I would want it to come all the way back down to this bullish imbalance. So anywhere from 127 to 125, I'd be interested in looking at Palantir. 127 to 125. It comes down and we get confirmation. Remember, you don't just buy because it hits the BBS. You have to wait for that bullish confirmation or bearish, depending on the direction, but you have to wait for that candle to confirm. So if we come down, we bounced off and we closed back above here, I'd be interested in taking a position on Palantir, and then it would look like this.
Why? What happened?
Entry would be, it has to be somewhere right in here, so we're just gonna call it the top of this. Entry be here, target is gonna be this 135 area. And then where our stop loss is gonna be below wherever the candle wicks off from, below. Typically it's gonna be when it fills this bullish imbalance. So for now, we'll just call it right there. You got a 3R, entry here, stop loss, 3R. This is also from the swing low, high, we come down, right, and we come up. Remember, that's how the market moves, guys. It moves in waves. So it doesn't matter what you have or what you're looking at. The market's always going to be doing something like this. Why I use this so much. It's either that, it's going to look like this. What this mark is, it's going to be around that BBS trigger. Why? Swing low, swing high, swing low. Look, 61.8. It goes straight into it. And same thing for the upside. It works so well, right? Because you're not buying a breakout, you're waiting for a bullish confirmation breakout, reconstruction, and then you're waiting for that pullback. So the way,
God. They must have,
because I don't want you guys to think it's just for bullish. It could be bearish too, right?
Not all of them are like that though.
Swing
so
high.
I have to keep trying. I
Into
did
it.
expect.
It's so natural, guys. I'm not figuring any of this stuff out. I'm just drawing it, right? But it comes so natural. Plus, you're using the Fibonacci sequence, which is seen all through nature. You're using the natural ebb and flow of the market, A, B, C. That's how the market moves. Now, yeah, sometimes the market can look like this. It's not always going to be that pretty, right? But in the end, the bigger move is still an ABC, right? Swing low, come down, ABC.
Yep.
ABC, no matter how much noise is in the middle, it's still going to be a movement that's making some type of wave. Does that make sense? Just real quick on Celsius, we're already in this. I think we're up like 30-40%. We sold one.
God, suffering with.
To see what happened on Celsius, we came down. You got your swing low to swing high, right? Swing low, swing high. We came down below the 61.8, and then we instantly got back above it the next day. As soon as we did, I got into it. I think we're in. Let me see where we're in at.
I don't know. I can't get used to the peasant life. I'm not having my Stanley.
Celsius, we are in at 3580. 3580. So right in here, 3580.
Checklist of stuff. Like make
our
sure
stop loss.
And then I start looking around like
just below this.
Oh my God, I can't find it.
The target.
It has to be in Danny's.
Here, 3R.
By that time, it was like
5R, right?
3 a.m.
So I'm looking for 42
So
plus.
like, yeah. What are we
when this happened, you're looking at the. Let's look at the volume. Look at this. Big volume up. Low volume going down in, and then the volume starts to increase again on these two candles. Another classic pulling method using the BBS. Came down, we broke it, we got back above it on higher volume, and we got a follow-through candle that broke the downtrend on even higher volume. Plus, we have people loading these 40 calls for June and July. Some of them could be sales. I think the majority are buys, but the main thing that I'm looking at is this volume, the whole setup, the fact that we're in this channel, big volume here, low volume pullback, and then we broke out of it. If we held the BBS, there's just several reasons why we got in Celsius, right? But you'll start to notice that all of my setups, all of my plays, they're all derived from the same organic analysis of using the BBS with confluences. I'm not using no fancy indicators. I'm not using no fancy scripts. I'm simply just looking at the price action using basic indicators and using the BBS to verify and confirm my entry. Right? It's very simple, guys, what I do. There's nothing special about it. It just requires patience, screen time, and experience. And then eventually all this stuff will be second nature, right? It may not make sense, especially if you're new to trading, it's not supposed to make sense right now. It's a lot of information to process, right? In the end, once you start using it more, once you get comfortable with it and it starts to resonate with you, then it'll become second nature and you won't even be thinking about it. You're like me in the morning. I'm just throwing stuff on there, not even thinking about it on the chart, getting ready for the day, right? Because I've done it so many times, it's repetitive. And that's what a system should be. It should be repetitive, consistent things that you do to set up for a trade that you're looking for. And it should be very simple, right? If you're using a strategy right now and you're like, well, I kind of get it, but I kind of don't. If it doesn't completely 100% make sense to you, probably not a good strategy, right? If what I taught you today is really not resonating, probably not good for you, right? Because this is a pretty simplistic strategy or analysis that I use. But if it's not resonating with you with how it works and why it works, then it's probably not for you. Maybe try it out for at least a month. I would say if you're new to trading and you want to try out this strategy, use it for at least a month. You go into it for a couple of days, like last week, the day trades on the BBS were, I think it was all 50-50. I probably lost more than I won on the day trade. But the swings, we raked in cash all week, right? So and that goes back to the whole ebb and flow of the market. You can have a trade setup hit 100 in a row and then turn around and miss 100 in a row. You just never know. That's why we use risk management, stop losses, and we play the game of probability. But I really think that's about it. I'll do some Q&A. You guys got any questions, let me know. If not, we'll wrap it up. Yeah, we just did Celsius though. Yeah, Walmart looks really good. W day. I don't even have. Let's see. Oh yeah. This looks really good. Actually, you brought this up to me, Sanju. This looks extremely good, in my opinion, because look, we're gonna draw the long term. We're gonna draw so this will be the last one I do, guys, and then we're gonna wrap it up. We're gonna draw the long term. If you've been paying attention in class, you know exactly what I see, right? Fib, BBS would come down into the 50, right? And what happened? First of all, this candle here. Let me show you something else. And again, some of these things just come with screen time and experience. This candle here, that's a capitulation candle. Massive volume. You can zoom out. We haven't had volume this big in a long time, right? Same thing on UNH. I want to go over that one too. Capitulation, right? Came all the way down, massive volume. That was the end of the sellers, in my opinion. Could it still go below that? Absolutely. Do I think it will? Probably not. Right? So this is capitulation candle. Happens. We start getting increasing volume off the BBS. And then the main candle, the breakout candle, right? Volume. Not a trade I would enter right now because you got to look at it from both perspectives. You also got to look at the longer term view. It came up, big drop. So you also have to be aware of the opposite end. So we're going to do this. take this one off for a second. We got to be aware of this. This is bearish, right? So this is resistance. We get above and flip that flag. Then you have the bearish BBS, where this could absolutely make a move. Like, I'm not saying it can't do it. It could do this, come up, and then dump down, right? You still have these down here, so technically it could come all the way down here if it wanted to, right? That's why if you did want to get on this, you definitely have to keep it light and use a stop. I do like the setup just because of the way we had this capitulation, right? We're gonna pick the regular one back up, swing low, swing high, right off the BBS. I think if we get a little bit more confirmation, we can go for the gap fill. So what I would like to see on this, to get an entry, and I'll be watching this next week. Or the next couple of weeks, whatever. I would like to see this come up, get above this. You see this area right here? I would like to see a breaker structure above this that comes back to back test and then goes to fill the gap, maybe even go higher, right? So the gap play in, right? But I would want to see a little bit more confirmation, get above this bearish flag, make a breaker structure, come back and back test the breaker structure, and then we can go for these targets up here. The gap fill would obviously be the first target right there. So let's just measure it out and see what kind of risk we got. If we wait for this and we get a back test, that's going to be our entry right up here.
All right, so
Loss is going to be that low. It's going to be below this 50%. Wherever the candle goes, we don't really know yet. And then your target would obviously be gap fill, this high, and then potentially all the way up here. So that's W day. Definitely one to keep on watch. Also have this playing out. Elliott wave, 1, 2, 3. Never broke below 5. If you notice, if we put a line here, this high was never broken. At least I don't think it was. Yeah. So this was the wave 1 high. That test of wave 1, this makes me like it a little bit more actually, because you had your big breakout and then you came down and back tested the wave 1. So this could easily be, using my extension here, be the A5 move that normally comes up to right here, right? So yeah, I mean, I like this. I think this will come back and fill the gap. Oh yeah, that's W day. And then just real quick on UNH, real quick. Oh, here we go. UNH behind him is probably my favorite setup in the market right now. Maybe my most favorite setup in the market. Doesn't mean I put more size into it. I took some leaps, I took one contract, and I got a little bit of shares. Reason I like it. Massive move down. Let's just take everything off. Look at how far we dropped. I mean, this was a massive drop, right? The first thing I did on this was measure out the long-term Fibonacci. If you was in the chat and you saw when we got in at that 61.8, which we had confirmation. We sold that thing for like 100%. And now we're holding the long-term one. Look at this. Take off all this junk. Long-term Fibonacci. That's actually good. Yes. So this was the low. This was the swing low back in 2002. this massive bull run. I'm telling you, look, you can't make this stuff up, guys. Look at where we bounced. This is the long, like the historic BBS, really, the historic BBS. Look where we bounced. So let's go now to the daily. Look at this. I think it was to the penny. Let's see. The low was 248.88, 249.91. So we even swept below it a little bit. This big bullish candle is when we entered. Let's see that we have this up. We have the BBS up, and we know how the BBS works. This would be a long-term target, but I think it's definitely doable. I'm only going to be holding for the short-term target, and I'll show you that in just a minute. So now we're going to look at our confluences. No need to check this. This is completely bugged out. The volume is what's important here to me. You had this capitulation candle. This is, ever seen a capitulation candle in your life? Right here, right? Massive volume, the biggest volume we've had, I think, ever in the history of this company. Massive volume. That was the end of the selling. That was the final flush, in my opinion. I do not think, I'm not saying it can't, I'm just saying I'm like 80% confident this is the low for UNH. It won't drop back below that, not in my opinion, but it could. All right, so we had this big volume. First stepped in at the all-time 61.8 BBS, right? And then you start having, this is still big volume, guys. Look at it compared to all this. Uptrend. Look how low the volume is. This isn't retail, right? It's so obvious. This is big money stepping in to buy UNAs. Big money, massive money, right? Loading up long-term shares. So we knew all that. That's why I originally got into the trade, and we took shares literally right around this area. The option play, we literally took it right here, right? And I also have these January leaps. So let's take this off. We know that let's put a line right here. We know that's the 61.8 and then the 50 line right there. All right, now we're going to remove this. All right, now we're going to go back to the short-term BBS. It's a short-term. Obviously, I don't want to hold for a 750 target, right? Short-term BBS real quick. Swing low, swing high. What do we see? Let's go down to a 4-hour chart. Oh, we can keep it right here. What do we see now? This was a capitulation candle off the all-time 61.8. Massive volume. That was the end of the selling. Then we have big money stepping in, buying it. And then you have this little bitty time at the bottom, right? Compared to all this of just consolidation. Nobody's selling, in my opinion, not now. It's bouncing off the 50. Look at the free gap. I want to show you that. It matters. The bullish imbalance. We have this bullish imbalance. Fill this gap. Right, so we have a gap fill. We have the BBS. We have the bullish imbalance. And this is another classic pulling method. Big breakout. This marked the low. Now we're having to pull back into the BBS. That's why, you guys, my target for UNH, I think in June, I think it'll hit 345 minimum. Continue to chop around, but I don't see us going back below. This is what I'm looking for on UNH today. Looking for it to keep going up. So that first target. So let's on this. Not too late to get in either. Let's look at this. You got your long position. Let's say you get in on a little small pullback Monday or whatever. All right, you're in here. Loss is going to be below the 50%, 285. We'll just call it 285. Your target, your first target is going to be already a 3R, 350. And then I wouldn't be surprised if it went to 370, right? right? Great risk to reward. It's got several confluences. The volume patterns match up. It's hitting the BBS. It has a gap that it filled. It has a bullish imbalance here that it held. Several confluences for this to, oh, and then what did we notice? We just entered new calls on this on Friday. Notice, starting to curl up. Get this back to where you can see it. Curl up here and the volume is starting to come back, right? Now we're just waiting. Make a big move soon. Already starting to curl. But that's UNH, guys. I really like this setup. But like I always say, one of my rules, I keep all my trades around the equal amount. That way, if I go on a cold streak, it's not going to kill me. It may suck like it did in March. I went on a terrible cold streak. Wasn't nothing working for me. But because I kept all my position sizes the same, and I had a lot of long-term positions, most of those came back. A lot of those came back. Tesla came back huge for it. So that's just part of the game, guys. It's part of trading. You're going to have big moves in the market, and sometimes you're going to be on the wrong side of it. That's okay. As long as you're managing risk, you're not over leveraging your size, and you're playing with long-term probabilities, you'll be fine in the end. Yeah, the ultimate invalidation would be back below. Let me for me, I think the invalidation would be below the close of this candle. So below the close of this, 274. Yeah, 275. Yeah, perfect. If we get below the close of this candle, we'll flush all the way back down, right? Because that's the wick doesn't really matter. I mean, it does, but I don't put a huge emphasis on it. We know that this was a lot of emotional people chasing, FOMOing put, and then they got trapped. So now they're all trapped, and this is on massive volume. So this candle, even though it's red, look at what happened. A lot of that was buying, right? A lot of it was buying. They sold to the downside, and then they bought it right back up. So if we get below the close of this candle at 274.30, it would invalidate the setup for me. I agree. I want to see more volume starting to come in. I think we're going to get that this week. I think we're going to see that big volume pop soon. Now that we're starting to curl up, so I'm looking for that explosive move soon, right, to fill this gap at the very least. So at the very least, we'd like to see a move to 321 this week or the next week. That's categorized bigger volume. Like I would like to see it come up like right there, followed by another volume even higher going towards that 345. What's up, Hazard?
Crawling your way upstairs.
You're a little late, bud. We're about to wrap it up. All right, guys. Any more questions? If not, we're gonna always wear protection. Yeah, that's great advice.
Stop hurting Mom Sham.
I appreciate you guys joining, man. I love teaching this stuff. I'm sure you can hear it in my voice. This is my life, my passion. I love this stuff, and I'm here to help you guys. I know sometimes I can be a little rambunctious, and I get excited, and I may post some FOMO-induced posts because we're hitting a big play or something. But I'm here to help you guys. If you ever have any questions, you reach out to me. If I don't know the answer, I'll find somebody that does. And we're all here together to make money, man. We're going to lose. We're going to win. In the end, the consistency speaks for itself, though. All right, guys. So you enjoy your weekend. If you have any questions, just DM me. Don't ever hesitate to reach out. And on Monday morning, we'll hit the ground running. You're welcome. Yeah, you're welcome, everybody. Enjoy your weekend. Take some time away from the chart. I'll be back here Sunday night to get ready for Monday. Thank you, guys. I'll see you Monday morning.